After a little bounce, the Nasdaq has gone back red. Stocks still encountering some volatility. Gold is not hedging. It's down 2%. Bitcoin's not working. It's down 1.5%. Seems like you got to go to crude or commodities, perhaps. Mr. Scott Bauer, CEO of Prosper Trading Academy. Where does one hedge if you're worried that this is going to be a pattern developing?
Well, that certainly has been the momentum trade, if you will, is in the commodity space here with crude and some of the others. Though, like you said, you've seen gold. It finally broke through 1,800 to the upside, hit 1,830, which is, kind of a massive resistance area. And based on the Fed minutes that we got yesterday, really reversed, down what, almost 2% or so today. So, yeah, crude is the space. But, Oliver, I'd be really, really careful here because I don't know how much of that is really a hedge per se as it is, geopolitical concerns at this point. There certainly are some headwinds there, but I'd be really, really careful, quite frankly.
So gold kind of stuck right now. Crude oil, what's the risk there? I mean, if for gold, the risk is we see rates go up or geopolitical tensions fade and it fails to catch a bid yet again. What's the commodity risk if that's going to be the way we diversify from tech these days?
That's a great question. And OPEC Plus is supposed to continue with some production, increased production in the next few weeks or the beginning of February. But I think that's all, maybe at this point a little questionable. There's some concern about that because of what's going on with the unrest overseas and in Kazakhstan and that, part of the world there. So I think that's why you're seeing this volatility in crude. I think that's why you're seeing these tailwinds behind crude. But if things do calm down and so much of the way that commodities trade, especially crude, is because of geopolitical risk in different parts of the world. But if we see that calm down again here, you may see crude heading back to 75 or lower. I'm not saying that's going to happen, but I think that's certainly a possibility. So anybody that wants to jump in the space and just say, that's my hedge against everything else here, that's a caveat. I think you really have to be aware of that.
But the trend's still favorable to your point here, right? You got higher highs, you got higher lows. And if we're looking for crude to give us some signal about inflation potential, it seems like it's telling us that the potential's still very much there.
No doubt about it. And normally with gold also, gold is a great, hedge against inflation. But what hit gold was these Fed minutes here about interest rates, right? So you've got almost this dichotomy here of inflation's a good thing, rising rates are not a good thing.
Right.
So, in the market obviously took that today as, here we go again. I wouldn't be surprised to see gold kind of level off here. I think what we saw this morning or what we saw over the last couple of days with this massive rise in rates, we've seen the 10-year in a week go from 150 to 175. I think it got a little bit of ahead of itself. Not that rates aren't still going to be trending to the upside. I think we may have seen the same thing here with gold, quite frankly, that this decline today maybe got a little bit ahead of itself. I think that this 1760, 1770 range should hold as some decent support.
Okay. All right. I like that. 1788 right now, so pretty close to it. And you draw a line up on the lows from gold, and we're not too far off it. Max like 1% away before you think it could hold that general kind of pull upwards, at least on the lows as we see here. All right, so I like that point to keep in mind. What about BTC, Scott? Down 1.5, flirting with 42, 43. Where does this fit into the whole equation right now?
Boy, it sure fits into the whole inflation equation. And Oliver, how many times have we had this conversation about trying to draw the correlation, between Bitcoin and a hedge or an interest rate hedge?
Yeah, good luck.
Now, boy, right? I mean, this seems like it's been going on for years. It probably has been. And there's certainly a lot of bearishness out there. 42, as you called, is really that next level of big support here. It is really the next level of big support here. If it breaks down there, we can look for 38. But I really think that it's going to hold here. I think this is an opportunity, at least in the short run, for both BTC and ETH, which has gotten hit worse than BTC, I think, on a percentage basis here. I think this is a good area to start buying in, especially if you've been on the sideline.
All right. If this one doesn't hold, we'll be violating a pretty steady 6-month
one.
uptrend there. Yeah.
Yep.
All right. Juicy, exciting stuff. Thank you, Scott. Like the price levels to think about, as always, helpful. Appreciate it, Mr. Bauer, CEO, Prosper Trading Academy. Gold at 1788 and BTC just above 42. Both assets here potentially close to some support area.